Hey guys, today we are going to look at a very interesting topic, butterfly effect. What is butterfly effect? So guys, butterfly effect is basically when a butterfly flaps its wings in one corner of the world, it can lead to world-changing event in another corner of the world. Today we are going to look at one such interesting event. Something happened in China and that led to an increase in fear in our market and the metal sector fell 15%. Today as a trader, we will see how to trade fear in the market. Exciting? Let's get started. Evergrande Group is one of the largest real estate group in China. They were the integral part in the growth story of the real estate boom in China. Started in 1996 by Hui Ka-yen, their growth story was phenomenal. In fact, they were a global Fortune 500 company and they had 2 lakh employees. They own 1,300 projects in 283 Chinese cities. After being successful in real estate, they started diversifying in fields like electric vehicle, insurance, theme park, bottled water, and whatnot. Not only business, they even had a soccer team, a soccer school. In fact, the soccer school is one of the biggest soccer school in the world. Evergrande actually borrowed finance to build this all. A little bit of debt is fine, but when it gets bigger, that's where the real problem starts. In 2018, the early signs of potential collapse actually popped. That is, China's central bank had said, this is risk. That's basically the company Evergrande has potential risk. In fact, Evergrande has accumulated debt of around 20 lakh crore. If you just take a comparison with our Indian context, the complete market cap of Reliance or even HDFC Bank is not 20 lakh crore. In fact, Evergrande's debt is increasing at 2000 crore Indian rupee every single day. When we further dig deep into the problem, they still have 12 crore undelivered flats for which the payment is collected, and also 48,000 crore high-yield wealth management products which they have sold to 80,000 investors. Currently, the stock is trading all-time low from 50 billion market cap to less than 5 billion market cap. That is a 90% erosion of wealth. Chinese government, to curb this borrowing, has taken some measures that is called 3 red lines. Ensure a liability to asset ratio is less than 70%, a net gearing ratio of 100%, that is a company cannot take debt more than its shareholders fund. Third, cash to debt ratio of at least 1. If you have done all 3, you cannot borrow the fund, and Evergrande has crossed all 3. Along with this, Evergrande has depressed flat sales, which is they were not able to find any buyers for the flats which they have made, which fueled to the cash flow issues to the investors. Evergrande has stopped paying their suppliers, contractors, employees, and even the wealth management investors.
That Evergrande has remained silent on its debt obligations, and that's worrying investors who fear that they could face huge losses when the 30 days grace period come to pass in a month's time.
So how this crisis of Evergrande will affect our Indian market? So basically, India is one of the largest metal supplier to China and their housing needs. And when there is a problem there, for sure that will be having a problem here also. So our metal companies like Tata Steel, JSW Steel are suppliers of steel to this housing company. So basically Nifty metal fell around 14% in a single week. We all witnessed it, right? When metal sector fell 14% in a single week, the volatility spiked up. So what happened is the implied volatility at that particular point of time was 17, which raised to 70. And when this implied volatility rises to such high extent, it is very good to deploy credit spreads. Our data suggests 83% of the time, the volatility reverts back to its mean. That is basically it cools off very soon. And when we deploy credit spreads to capture this volatility spike, this is called volatility crush. Credit spreads are those spreads where we are net sellers of options. In this scenario, what we do is we sell higher premium options and then we protect it with buying a lower premium options. So basically there are multiple credit spread strategies like straddle, strangle, iron condor, iron butterfly, calendar spreads. For example, this is Tata Steel and we have stimulated iron condor, one of the credit spread, to capture the volatility crush between this range. And as you can see, this has beautifully captured the volatility crush and had made a great returns of around 8% in the capital deployed in less than 4 days. And we are still in this trade as on 5th October to crush the further volatility. So guys, we just saw there are multiple credit spreads which can be applied to capture this volatility crush. Every spread has their own style. It completely depends upon the type of trader you are. To learn more about credit spreads, do visit LearnApp.com. Also, we have LearnApp workshops where we frequently learn together to identify opportunities just like this and learn the scenarios which can be applied in live market. These workshops are totally free for our LearnApp members. So guys, what are you waiting for? Do check out LearnApp.com. Do like, share, comment and subscribe. See you in the next video.